China's cities pulsate with a frenetic energy. The streets are alive with the hustle and bustle of daily life, where millions of people move in a synchronized dance of modernity and tradition. From the ancient alleys of Beijing to the sprawling urban landscapes of Guangzhou, the rhythm of life is relentless and captivating. Shanghai's skyline rivals New York's in its audacity. The cityscape is a testament to human ingenuity and ambition, with towering skyscrapers piercing the night sky, illuminated in a dazzling array of lights. The financial district stands as a beacon of economic prowess, where fortunes are made and lost in the blink of an eye. Factories hum with unparalleled productivity, churning out goods for the world. The assembly lines are a symphony of efficiency, where workers and machines collaborate in perfect harmony. These industrial powerhouses are the backbone of China's economy, producing everything from electronics to textiles at a scale and speed that is unmatched globally. Financial centers like Shenzhen buzz with the ambitions of a new generation of entrepreneurs. These young visionaries are driving innovation and pushing the boundaries of what's possible. In sleek, modern offices, they brainstorm ideas that could become the next big thing, fueled by a relentless drive to succeed and a supportive ecosystem that nurtures their ambitions. China's economic transformation has been nothing short of breathtaking, lifting millions from poverty and propelling the nation to the forefront of the global stage. The rapid urban development is a visual representation of this progress, with new skyscrapers and infrastructure projects constantly reshaping the skyline. Markets buzz with activity, reflecting the newfound prosperity and consumer confidence. This economic miracle has been fueled by a potent mix of factors. Strategic government policies, a vast and industrious workforce, and a focus on infrastructure development have all played crucial roles. The financial charts tell a story of growth and resilience, while the government buildings symbolize the centralized planning that has guided this transformation. Government policies, often described as state capitalism, have played a pivotal role. These policies have provided the framework for economic growth, balancing market forces with state intervention to ensure stability and progress. The National Congress building stands as a testament to the centralized decision-making that has steered the country through its rapid development. A seemingly inexhaustible supply of low-cost labor fueled China's rise as the world's factory. The workforce, characterized by its diligence and adaptability, has been a key driver of this industrial boom. In bustling industrial areas, the sheer scale of production is evident, with workers tirelessly assembling products that reach every corner of the globe. Massive investments in infrastructure, from high-speed rail to sprawling ports, connected the nation and facilitated trade. These projects have not only improved domestic connectivity, but also positioned China as a critical hub in global supply chains. The high-speed trains symbolize the country's forward momentum, while the busy ports highlight its role in international commerce. The world watched in awe as China's economy surged, seemingly defying gravity. The rapid pace of development and the scale of economic growth have been nothing short of extraordinary. As the sun sets over Shanghai, the city transforms into a vibrant metropolis, a symbol of China's economic might and its aspirations for the future. Double-digit growth rates became the norm, transforming the nation into an economic powerhouse. The construction of new skyscrapers is a constant reminder of this growth, while the economic charts reflect the impressive gains made over the years. China's rise has been a story of relentless ambition and strategic planning. From a developing country to the world's second-largest economy, China's journey has captivated observers and challenged conventional wisdom. The transformation of cities like Hong Kong and Beijing showcases the country's ability to adapt and innovate. Modern developments stand alongside historical landmarks, creating a unique blend of the old and the new. But beneath the shimmering surface of prosperity, cracks have begun to appear. Aging infrastructure and signs of wear and tear are becoming more evident, highlighting the challenges that come with rapid development. These issues serve as a reminder that sustained growth requires continuous investment and maintenance. The very forces that propelled China's ascent are now posing daunting challenges. Environmental degradation, urban congestion, and social inequalities are some of the pressing issues that need to be addressed. The factories that once symbolized progress now also represent the environmental cost of rapid industrialization. The Chinese government faces a delicate balancing act, maintaining growth while addressing systemic issues that threaten long-term stability. Policymakers are tasked with finding solutions that ensure sustainable development, balancing economic ambitions with social and environmental responsibilities. The future of China's ascent depends on navigating these complex challenges with wisdom and foresight. China's economic growth, once a reliable engine of global prosperity, is showing signs of sputtering. While still impressive by most standards, GDP growth has slowed from the heady days of double digits to a more modest, though still respectable, pace. Industrial output, the backbone of China's economic miracle, has also lost some steam. Factories that once churned out goods non-stop are now grappling with overcapacity and slowing demand. The global economic slowdown, exacerbated by geopolitical uncertainties, has dampened appetite for Chinese exports. Retail sales, a key indicator of consumer confidence and domestic demand, paint a mixed picture. While China's burgeoning middle class continues to drive consumption, growth in retail sales has slowed, reflecting a degree of caution among consumers. The Chinese government, acutely aware of these challenges, faces a delicate balancing act. Stimulating growth while addressing structural imbalances is no easy feat. The path forward requires careful calibration of policy levers, navigating a complex web of domestic and international pressures. The US-China trade war, once a simmering tension, has erupted into a full-blown economic conflict. What began as a series of tariff threats has escalated into a complex web of economic measures, impacting industries far and wide. Tit-for-tat tariffs have disrupted global supply chains and increased costs for businesses and consumers on both sides of the Pacific. The ripple effects are felt in every corner of the economy, from the price of everyday goods to the availability of critical components for manufacturing. The trade war has exposed the deep interdependence of the US and Chinese economies. Financial markets have been volatile, with investors reacting to each new development in the trade negotiations. The uncertainty has made it difficult for businesses to plan for the future. China, once a seemingly insatiable market for American goods, has seen its imports from the US plummet. This decline has had a significant impact on American exporters, who have had to find new markets for their products or face financial losses. American businesses, from farmers to manufacturers, have felt the pain of lost sales and disrupted markets. Farmers in particular have been hard hit, with many struggling to sell their crops and livestock. Manufacturing plants have closed, leading to job losses and economic hardship in affected communities. The trade war has also accelerated a decoupling of the two economies. Companies that once relied on Chinese suppliers are now looking for alternatives, while Chinese firms are seeking to reduce their dependence on American technology and products. Companies, once eager to tap into China's vast market, are now reassessing their strategies. The uncertainty and risk associated with the trade war have made it more difficult for businesses to justify investments in China. Diversifying supply chains and seeking alternative markets have become priorities, adding to the uncertainty of the global economic outlook. Businesses are exploring new regions for production and sales, but this transition is neither quick nor easy. The trade war's impact extends far beyond the US and China. Countries around the world are feeling the effects, as global trade patterns shift and economic growth slows. Emerging markets in particular are vulnerable to the disruptions caused by the trade war. The global economy, already grappling with slowing growth, faces further headwinds from trade disruptions and escalating tensions. The uncertainty has led to reduced investment and consumer spending, further dampening economic prospects. The rules-based trading system, long a cornerstone of global prosperity, is under strain. The World Trade Organization, which has played a key role in resolving trade disputes, is facing challenges as countries increasingly resort to unilateral measures. The future of global trade hangs in the balance as nations navigate this new and uncertain landscape. Section 4. Cracks in the foundation, real estate, and debt. In this section, we delve into the intricate and often precarious relationship between real estate and debt in China, a nation whose rapid economic ascent has been both a marvel and a cautionary tale. Beneath the gleaming facade of China's economic success lies a troubling reality, a mountain of debt and a property bubble of epic proportions. The impressive skyline, adorned with modern skyscrapers, masks the underlying financial instability that threatens to unravel the economic fabric of the nation. Years of easy credit have fueled a construction frenzy, leaving China dotted with ghost cities and unfinished projects. These ghost cities, with their empty streets and vacant buildings, stand as stark reminders of the overambitious development plans that have outpaced actual demand. Local governments, heavily reliant on land sales for revenue, have racked up enormous debts financing infrastructure projects and propping up ailing state-owned enterprises. The reliance on land sales has created a vicious cycle, where local authorities are compelled to continue selling land to service their mounting debts. This debt burden, while manageable in a high-growth environment, poses a systemic risk should the economy slow further. The financial graphs reveal a worrying trend, with debt levels climbing steadily, raising concerns about the sustainability of this growth model. The real estate market, once a symbol of China's economic might, is teetering on the brink. High-rise residential buildings, which were once in high demand, now face the risk of becoming the next wave of ghost structures if the market continues to cool. Prices in major cities have skyrocketed, making homeownership a distant dream for many. Young couples, eager to own a piece of the urban landscape, find themselves priced out of the market, leading to growing frustration and social discontent. The bursting of this bubble would have devastating consequences for the Chinese economy and send shockwaves through the global financial system. Financial analysts are increasingly wary, as the interconnectedness of global markets means that a crisis in China could have far-reaching implications. The Chinese government faces a daunting task, deflating the property bubble without triggering a financial crisis. Policymakers are caught in a delicate balancing act, trying to implement measures that will cool the market without causing a sudden collapse. Balancing the need for continued growth with the urgency of addressing these structural imbalances will require deft policymaking and perhaps a bit of luck. The bustling cityscape at night is a testament to China's economic dynamism, but it also underscores the challenges that lie ahead. As economists and policymakers deliberate, the world watches closely, aware that the outcome will have profound implications for the global economy. Section 5 Beijing's Balancing Act, Stimulus and Reform. Faced with mounting economic challenges, the Chinese government has responded with a mix of stimulus measures and promises of structural reforms. Massive infrastructure projects, a tried and tested method of boosting growth, are once again on the agenda. Tax cuts and other fiscal incentives aim to stimulate consumer spending and encourage business investment. The central bank has injected liquidity into the financial system, hoping to keep credit flowing and prevent a sharp economic contraction. But stimulus alone is unlikely to be enough. The Chinese government recognizes the need for deeper structural reforms to address the root causes of its economic woes. Moving away from an export-dependent growth model and fostering domestic consumption is a key priority. Reforming state-owned enterprises, often inefficient and burdened by debt, is another pressing challenge. Creating a level playing field for private businesses and fostering innovation are crucial for long-term sustainable growth.